Welcome to Thoughts on Investing. This week we're going to unpack how one single spark, a military conflict, basically lit a fire across the entire global market. It's a story driven by oil, by war, and by some truly massive policy shifts coming out of Washington. We're going to follow the dominoes as they fall, from the geopolitical flashpoint all the way to Wall Street's reaction. Let's get right into it.
But first, you know the drill, just a quick but important reminder. Everything we're about to talk about today is for informational purposes only. It's to help you connect the dots on what's moving the markets. This is absolutely not financial advice, so please always do your own homework before making any investment decisions.
So where did this all begin? Well, the first domino to fall was a military conflict that sent these immediate shockwaves through the world's energy supply. It just set the stage for a week of, well, pure chaos. Markets reacted instantly to the news of U.S. strikes hitting Iran's Kharg Island, and you have to understand the scale of this. This one single facility handles a staggering 90% of Iran's oil exports. Now, you combine that with the disruptions already happening in the Strait of Hormuz, which is a choke point for a fifth of the world's entire oil supply, you can see why the market suddenly got very, very scared about a severe global shortage.
And the result of those fears? Well, you guessed it. Oil prices immediately shot up, swinging wildly all week, but pretty much staying above that critical $100 per barrel mark. And this is where things get really tricky, right? Because while high oil prices are a huge win for energy companies, they can be an absolute curse for the rest of the economy.
So that brings us to the second domino, the government's response. With energy prices just soaring, Washington rolled out some truly massive, almost desperate interventions to try and put out the fire.
And this is where we see just a stunning U-turn in U.S. policy. Just weeks ago, the whole game was about restricting Iran with sanctions. Now, seemingly overnight, the #1 priority became stabilizing oil prices no matter the cost. That right there tells you just how worried officials were about these rising energy costs crippling the entire global economy.
So this intervention came in two really big parts. First, they temporarily lifted sanctions on Iran. Now, that move alone unlocked about 140 million barrels of oil that were just sitting in tankers out at sea. Second, the U.S. started tapping its own emergency piggy bank, the Strategic Petroleum Reserve, releasing an initial 45 million barrels. These are not small moves, folks. This is the kind of stuff you do only in the most serious global crises. And it wasn't just a U.S. thing. The International Energy Agency started thinking about its own releases, which led analysts to call this one of the largest coordinated energy interventions in history. It was a crystal clear signal that governments all over the world were taking this threat of an economic slowdown incredibly seriously.
Okay, so we've got the conflict and we've got this massive policy response. Now for the third domino. How did the stock market actually react to all this? Well, the story here is one of deep divisions, rising fear about inflation, and just extreme sensitivity to every single political headline.
And you could see this split perfectly in how the market performed. On one side, you had the energy giants, your Chevrons and Exxons, absolutely surging as they cashed in on those high oil prices. But on the other side, the broader market, the S&P 500, was clearly buckling under the weight of it all.
So why did the rest of the market struggle so much? It comes down to one word: inflation. See, high oil prices don't just mean you pay more for gas. They drive up the costs for everything, from shipping to manufacturing. And that got investors really worried that the central banks would have to keep interest rates high to fight that inflation, which, just slows down the entire economy.
This week was a perfect example of just how wired the market is to political news. Every single time President Trump even hinted that the conflict might end soon, you'd see stocks rally and oil prices dip, even if it was just for a little while. It's a pretty wild reminder of how billions of dollars can shift on just a single comment.
But here's an interesting twist in the story. It wasn't all doom and gloom across the board. Amidst all the chaos in the energy and industrial sectors, one part of the market acted as this surprising island of stability.
So while energy stocks were grabbing all the headlines, if you looked a little closer, you'd see that key parts of the tech sector actually held their ground remarkably well. Investors were still putting money into companies focused on those huge long-term trends like AI and the semiconductors that power everything. It's a fascinating insight, right? It suggests that even when the world is panicking about a short-term crisis, the smart money is still betting on the innovations that are going to shape our future.
All right, let's connect all the dots. It's time to recap the domino effect that really defined this incredibly chaotic week.
So here's the week in a nutshell. A geopolitical spark sent oil flying past $100 a barrel. Washington hit back with a massive policy U-turn and started opening the emergency oil taps. This created a completely split market. Energy stocks took off, while pretty much everyone else got slammed by inflation fears. And then, layered on top of everything, every political headline just sent new shockwaves through the system.
And all of that leaves us with the big question. What's next? After a week of these historic interventions and really sharp reactions, where do we go from here? With so many powerful forces pulling in opposite directions, do you think oil prices are set to climb even higher, or is a massive crash just around the corner? I'd love to know what you think, so drop a comment below.
And that is our breakdown of a wild week in the markets. If you found this explainer helpful, do me a favor and hit that like button, and be sure to subscribe for more deep dives. Thanks for watching.